The Bank of England has decided to keep interest rates on hold and said it expects the UK economy to grow slower than previously estimated. That's after a disappointing economic performance in the first quarter. The bank's Monetary Policy Committee has voted to leave its benchmark interest rate unchanged at 0.5%. It also slashed its forecast for economic growth this year from 1.8% to 1.4%. Inflation stands at 2.5%. which is still well above the bank's 2% target, but it sees inflation falling faster than expected towards that goal in the next 2 years. The UK's trade deficit for both goods and services narrowed by nearly $950 million in the first quarter to $9.3 billion. That's due to a fall in imports. Jasper Lawler is the head of research at London Capital Group. He says the central bank needs to raise rates, but gradually.
Well, for me, certainly it was the downgrade to the forecasts for both growth and for inflation for the UK over 2018 and 19. That was in addition to the fact that obviously the bank had just failed to raise rates, which many had expected as little as a month ago. It was those downgrade on forecasts which really piled the pressure onto the British pound, because the chance of there being even one more rate hike this year seemed to be draining away. But offsetting that somewhat was the fact that we had the voting numbers, and that actually they remained the same. So 7 voters in the Monetary Policy Committee had voted to keep rates the same, but actually 2 still voted for a rate hike. So I think had that voting changed, would have seen a much more negative reaction in the pound. My sense is that actually probably the reaction in the markets leading up to this, namely that big drop in the pound that we've seen, is probably a little bit overdone. And I think overall, although the economic assessments have changed, probably actually there's some room for correction in markets after this meeting. Obviously, the balancing act that they're trying to do is raise rates to a more normal level without choking off the economy in the process, all the while obviously trying to keep inflation at sensible levels. And while the economy did slow and there was some definitely very negative data in the first quarter, the Bank of England themselves have just said that actually they expect later revisions to first quarter growth to pick up a bit. So with all the balances in place for the economy, I think still better to very gradually raise rates. And most importantly for the Bank of England, to actually guide investors and to guide participants in the economy, even just consumers in the UK, about where rates are going, because that's been one of the standout messages from the Bank of England, is that the message changes every quarter, so they need to be a little bit more consistent and tell us just 1 or 2 more rate hikes this year, the same next year.